Welcome to this edition of the Risk Event. We're talking now for the week starting Monday the 31st of July. We're off now to our South African newsroom in Johannesburg and joining Zain Vawda with a look at an event to watch out for. What do you got for us, Zain?
Hi, Jeremy, and thank you for having me. The key risk events I will be focusing on the week ahead will obviously be a pair of central bank meetings from the Reserve Bank of Australia and the Bank of England, respectively, obviously, with a possible bullish continuation for Great British Pound, Australian dollar. Now, if we can take a quick look at the Australian economy, obviously, we did have the quarter-on-quarter inflation numbers released earlier this week. Now, we do know that the RBA do put a lot of faith in the quarter-on-quarter inflation numbers rather than the month-on-month print, which is a recent economic indicator for the central bank. We aim to keep rates steady at next week's meeting, obviously hoping to gauge, further data prints in the coming weeks ahead of the September meeting before making another decision on whether to hike rates once more. Now, if we look across the pond, obviously at the UK, and the picture is slightly different, where we are debating whether it will be a 25 or a 50 basis point hike at next week's meeting. The inflation picture, obviously, in the UK playing a significant role as well. There's a slight slowdown on the inflation print as well from the UK. However, I do think that the Bank of England will persist with a 25 basis point hike at next week's meeting and keep the door open a potential 25 basis point hike in September, as well as the inflation picture in the UK still remains a little bit tight. Now, obviously, taking all of this into account and this interest rate differential that might come into play for the rest of Q3, obviously, if we can take a look at the technicals and take a look at the weekly chart of Great British Pound, Australian dollar, it might give us a bit of a better indication as well of what to expect over the coming days. Now, if we can see on the Great British Pound, Aussie dollar, we had hit the year-to-date high around 3 weeks ago, around the 194 handle, before seeing some retracement there as well, back down towards that key confluence area around the 190 mark. We have seen quite a bullish move earlier this morning as well, with about a 200 pip move already this morning from that 190-600 mark. So if there is any chance of a possible retracement here, I do think that would provide a better risk-to-reward opportunity. On the upside, obviously, key resistance levels will be the year-to-date high around the 194 mark. With a break there, I will be keeping an eye on the overall upside to look at the long-term descending trend line at 196, which I do believe will still be tapped into at some time during the next 2 to 3 weeks, hopefully. So, yeah, I think a lot to unpack for next week, but I do expect some volatility, particularly around Great British Pound and Australian dollar.
Yeah, good call. Zain, thanks so much indeed for joining us. 2 central bank meetings to watch out for, providing a twin look at sterling against the Aussie dollar.